Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The euro and French bond futures under pressure after a leftist alliance seizes a shock victory in France's election, stoking concerns about political instability. We'll dig into the market impact with Thomas Friedberger of TKO Investment Management and Nicolas Frost of Candriam, live from Paris. More Democrats call on Joe Biden to step down as the party's nominee, but the president is defiant ahead of hosting NATO leaders in Washington. Plus, Hungarian Prime Minister Viktor Orban visits China after his controversial meeting with Vladimir Putin. We'll look at what to expect.
In the meantime, a quick check on these markets. You are seeing futures take a little bit of a breather, but again, not by a massive margin, despite some of the geopolitics Anna just laid out. Eurostoxx 50 futures down 0.2%, dropping below that 5,000 level. FTSE 100 as well, down about 0.1%. Euro dollar not moving a ton, though, still at a 108 handle, 108.24 and 4.29 on that 10-year yield after the U.S. jobs report. The countdown to the opening trade starts right now.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
A majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
Tonight, the political faction I represented in this campaign, even though it performed 3 times better than predicted in the last weeks, did not attain a majority. Thus, loyal to the Republican tradition and in tune with my principles, I will hand the President of the Republic my resignation tomorrow morning.
Wow, key French political voices, including the outgoing Prime Minister, Gabriel Attal. You heard him at the end there saying he tenders his resignation. So the big question, who takes over? Good morning, everybody. Welcome to Monday's programme. 7:02 here in London. So we do have early indications of where France is heading politically. And so our attention turns to the market and the market's response. Kriti, good morning. Let's look at where we are on some of these French assets. The euro has been retreating, but not overly so, just a little off its earlier lows. We've seen some selling in OATs, but also in bunds. And interesting to see how the CAC 40 is set to open this morning. In terms of the futures picture, we are expecting to see that the French market will open a little bit negative this morning. In fact, more negative than the rest of Europe. So just opening now, CAC futures down by 0.7%. Eurostoxx 50 futures down by 0.2. So there is nervousness. We could be in for a bumpy ride. We'll speak to Gilles Moek shortly, and he reminded us that over 50% of OATs are owned internationally, which is way more than the UK and Italy, for example.
Yeah, it's so important to also mention, you talked about the futures pricing. When you look at Eurodollar, you're still at a 108 handle, though, and this comes after weeks of that weakness coming after the Macron-Snap election. So I think this is interesting to say which assets are actually far more reactive and which assets probably price some of that in. I'm curious how much of that story is the FX narrative that we're going to see. And that's just one of the political situations we're watching around the world. The other, of course, is over in U.S. politics. The fallout after the interview of President Biden with George Stephanopoulos on ABC. Anna, he didn't do as badly as the debate, but he also didn't do that great either.
Yes, and so where is the bar these days? You sort of, do you need to outperform people's very low expectations now to be impressive and to stay on the ticket? He remains defiant. There are a lot of voices, though, calling on him to go, Kriti.
There are, and I would say most notably David Axelrod, for example, who's a former Obama campaign manager and actually helped get President Biden to that vice presidency seat before taking on the presidency as well. All saying, look, this is an election he just cannot win. If you look at the polling numbers, and I think the bar of success for this interview was specifically how well President Biden polled, was able to narrow that gap, was specifically when it came to a 6 to 7 percentage point lag from President Trump. He did that. He's still only lagging, say, 3-4 percentage points in several of these swing states. But is it enough over the next few weeks?
Yeah, interesting piece on the Markets Live blog actually saying maybe markets don't care who the Democrat candidate is. And that sounds like a shocking thing to say, but kind of getting underneath the hood of what matters for markets. If somebody is nominated who can beat Trump, that is the thing that will change the market's thinking, because the market is increasingly pricing in, it seems, a Trump victory later in November. So that's some of the geopolitics. We've been to France, we've been to the United States. Let's deal with some of the other really interesting geopolitical movements we're seeing right now. We've seen Viktor Orban, the Hungarian Prime Minister, go from Kyiv to Moscow, now on to China, Kriti. He says it's a peace mission. The European centre, if you like, objects to what they see as his attempt to represent them on the global stage.
Yeah, look, Hungary just took on the EU's rotating presidency as of July 1st. And one of the first diplomatic or peace missions he chooses to do is in Moscow, of course, taking, to your point, a lot of pushback. Charles Michel is the EU president, of course, and has been the representative for foreign diplomacy on behalf of the EU, being very vocal that what Viktor Orban does via his role in Hungary is not representative, to your point, of the rest of Europe. I think it's interesting, though, that Vladimir Putin didn't just meet with Viktor Orban, he's now meeting as well with Narendra Modi. So whereas that may be a slap in the face to the EU, it's a similar story to the United States, which really relies on that support and that alliance with India.
Yeah, India increasingly playing that important role, and Putin will see it as such. I was really fascinated by the way this is playing out in Germany. Germany is very angry with what Viktor Orban is doing here, and this is already having diplomatic fallout. Annalisa Baerbock was supposed to go to Hungary this week, and she has been told that she is not welcome. So within the EU, this is already having a real impact. Let's get back to where we started the programme, and that is all of the weekend's developments in France, or last night specifically. Let's go back to France, to Bloomberg's Tom McKenzie, who is in Paris. And Tom, talk us through the initial reaction where you are. We're looking at a board on our screen that tells us how the markets are reacting. A little nervousness in the euro, a lot of nervousness in French stock futures. What's the initial reaction where you are?
Well, I'll read out the front page of one of the newspapers, Le Parisien, this morning, which says, now what? And now what? And that is a key question. The uncertainty in terms of how you form a government on the back of the numbers of seats that came through. But the key takeaway as well, of course, for many in France, particularly those centrist and on the left, is relief that the national rally have not made as many gains, of course, as the polls has suggested. At one point, the pollings was suggested they would get an absolute majority. Very, very far from that. They came in actually third in terms of Marine Le Pen's party. But top of the list is the New Popular Front. And in fact, this is something I'm going to give you and your team credit for this, because I know you've discussed the risks around the leftist alliance getting the top spot. And in fact, that is what's happened. And so the market reaction to digesting the news that a New Popular Front that's made up, by the way, of not just the socialists, but also the France Unbowed, that extremist leftist group, as some would characterise it, but also the communists and Greens, that is now working its way through, of course, the market reaction to this. Macron's party did far better than expected, coming in actually second place. So the key question going forward is there an opportunity now for Macron's party to form some kind of coalition with maybe some of the less extreme parts of that leftist grouping, possibly with the socialists, possibly with the Greens? That, according to some analysis, could give him easily enough. He needs to have more than 289 seats in the National Assembly to get a majority. If he's able to carve out the socialists and the Greens from that leftist grouping and form some kind of alliance, that could give his party and those groupings enough seats, above 300, to have a majority. But of course, that is still very much in the works. The other option potentially is a technocratic government, but France has no history of this. The key takeaway for many will be that the Republican front did hold once again, keeping the National Rally out of office.
So, Tom, going into this, that's the politics. Going into this, the markets were largely worried about what the implications are for policy and, by extension, what this means for a deficit that has only been growing. Does this have a little bit of a sigh of relief, not necessarily for the politics, but for the economics and some of those spending goals? Are they now put on ice?
They are put on ice for now because we do not have a government. So we'll have to see what forms of government come through, if they are able to negotiate a coalition, an agreement, a partnership between these different parties, and if indeed they're at the point where they can start to appoint ministers, because we're not even there yet. So the market instability and uncertainty remains. What is clear, though, it seems, if you get a government on the back of this, there's a pretty strong case to be made that there will be more spending coming, because even Macron's party was looking at additional spending of around 20 billion euros. The National Rally, they came in third. They were looking at additional spending of around 71 billion euros. But the new Popular Front, who came first, on some calculations, were looking to spend around 179 billion euros per year. So there will have to be a compromise. It does seem that higher spending is potentially on the cards now for this new French government, when we get a new French government, at a time when, of course, the European Commission is asking, in fact, for cuts of around 20 billion euros from France. Debt to GDP here is about 111%. The deficit is around 5.5%. So there's very little room for any new government to enact additional spending. But it seems if you're going to get a coalition, if you're going to get a government coming together, there will be pressure from many of those within that grouping to push through with additional spending, given that it was part of their policy mandate.
Tom, thank you very much. Bloomberg's Tom McKenzie in Paris with the latest on the political story coming out of France over the weekend. We'll have plenty more with our guests on this subject coming up during today's programme. We've got every angle on the French election covered, from Paris and beyond, from the politics and economics to the markets. Plus, it's a huge week, of course, for Joe Biden as the US hosts that NATO summit later in the week. We discuss US politics as pressure continues to mount on the US president.
And, of course, plenty of data, plenty of other geopolitical events to watch out to. Let me walk you through it. Of course, we've already talked about the French election, the Modi and Putin meeting as well, the NATO summit. Even the new UK Parliament is meeting on Tuesday as well. But for the market, it feels like a lot of the focus, Anna, may come right back to the Federal Reserve. Jerome Powell testifying at the Senate Banking Committee on Wednesday, right before that U.S. CPI report on Thursday as well. And then when we talked about that U.S. political stories, that DNC platform committee meeting on Thursday, which is really with the leadership of the Democratic National Committee saying, do we want to back Joe Biden? Remember, the clock is ticking to hit that Ohio ballot deadline. And then Friday, it comes right back to the corporate space. What do the U.S. banks say in terms of setting the precedent for the earnings cycle this time around?
Yeah, there's a lot to keep us busy. I'm drawn to the NATO summit taking place, not just because of its significance around Biden's future, around the future for the Ukraine conflict, of course, but also because, parochially here in the UK, Keir Starmer will be there on the world stage for the first time. So that'll be interesting to see the messaging coming out from that. He's already had conversations over the weekend, we know, with certain world leaders. In terms of the data, CPI, you're right to flag, and we'll work our way towards that on Thursday. Obviously, the Fed prefers PCE. We know that. But we are expecting to see a little bit of a drop back in that CPI number, 3.3 to 3.1%. But ex-food and energy, things could be really quite static at 3.4%. And interesting, coming off the back of Friday's messaging from non-farm payrolls, which kind of got the market saying, come on, hurry up and cut. And can we now look ahead to a September cut, is the market's thinking, it seems, at this point.
Yeah, 2 Fed cuts now priced in the market, to your point. To me, what caught my eye this morning was the 10-year yield at 4.28. It is slowly making its way back to that 4% level. It wasn't too long ago on this very program we were saying, is 5% the new normal on the 10-year yield? And now it looks like you are starting to see that push lower. But of course, we know that there's so much concern around that September cut being viewed as some sort of political mandate. I'm curious how much or how long that actually stays.
OK, let's get up to date with some of the other stories from around the world that we need to keep on our radar. Iran has elected a reformist president, keen on restarting talks with the US over a landmark nuclear deal. Masoud Pezeshkian, a 69-year-old heart surgeon, beat his hardline rival by almost 3 million votes in a runoff. Turnout was just under 50%, one of the lowest ever recorded for a presidential vote. Pezeshkian's challenges include the handling of Iran's conflict with Israel. Paramount, the parent company of CBS and MTV, has agreed to merge with Skydance Media, ending one of the messiest and most dramatic mergers in recent history. The deal hands control of a major Hollywood studio to independent producer David Ellison and marks an abrupt turnaround after talks collapsed last month. He plans to invest more than $8 billion in the business and vowed to give the film and TV giant a fresh start. Boeing has agreed to plead guilty to criminal conspiracy to defraud the United States. That's after the Justice Department concluded the plane maker failed to adhere to an earlier settlement stemming from 2 fatal crashes of its 737 MAX jetliner. Under the agreement, Boeing faces a criminal fine of as much as $487 million, and the plane maker will install a corporate monitor. So much going on at Boeing, it seems, and new leadership clearly in the works. I mean, to say it's needed is sort of, too backward looking. They know it's needed. They're looking. They're on the hunt for new leadership, and that's clearly important.
I mean, they were stuck in between a rock and a hard place. Do you have this long, drawn-out trial, or do you have ultimately just pleading guilty? And they've clearly chosen the more expedited option. I think what will be interesting here is what the consequences actually look like. Again, at the end of the day, there are only two major players who provide these kind of questions. Some would argue these are, in the industrial space, too big to fail. So what kind of consequences are there as they are, to your point, going through this shakeup?
We'll keep an eye on Airbus this morning. Interesting in other corporate news, we've had an offer from Carlsberg to buy the drinks company Britvic this morning. So Carlsberg agreeing to buy Britvic, £13.15 a share, it would seem. This has been agreed by the boards of both of these businesses. The price implies an 8.7% premium, I read this morning, and it values the whole of Britvic at approximately £3.3 billion. And you do have to wonder, this is coming just after we got political certainty in the UK.
And it also comes as Carlsberg terminates their share buyback program. It looks like off the back of that deal as well. So both are two stocks we'll be watching ahead of the open.
Absolutely. Coming up on the programme then, Joe Biden doubles down after more House Democrats call for him to step aside. We will get the thoughts of Leslie Benjamin from Chatham House. We'll get her analysis of how likely Biden is to stay or to go. Plus, Delivery Hero may face an antitrust fine of over €400 million. We'll get the details and look at more of our stocks to watch this morning, including now Britvic and Carlsberg. Up next, the euro edges lower on concern about France's post-election finances. We'll get more on that subject coming up right after this break. Gilles Moek of AXA Investment Managers will give us his take on how the politics shapes up for markets. If you have any questions, please do get in touch with us. IB plus BBTV Go is the function to use on your Bloomberg terminal. We're live from London. We're live from Paris this morning. This is Bloomberg.
We're about 40 minutes away from the opening trades across Europe. You are seeing futures pointed a little bit lower across the Euro Stoxx 50 and FTSE 100, but the French index futures are taking a bit of a beating, down about 0.7%. Even though euro dollar, for example, not actually seeing that much movement. We're still at a 108 handle when it comes to the currency pair. And of course, as we speak, and I should say the initial trades or the opening trades even on the French bond market are coming in. We are seeing yields higher across some of the maturities, the 5, 7, 15, and 30. We're still waiting for the opening 10-year yield.
Actually, the 10-year just opened, and that, to your point, is doing exactly the same as the others.
Yields higher across the board by about 2 to 3 basis points. Let's go to what's actually driving the story. President Emmanuel Macron facing a coalition tussle following a surprise win by the French leftist alliance in Sunday's legislative election. Some strategists suggesting a hung parliament would actually be a positive outcome for investors, although the left's success will likely still concern the markets just a little bit. Let's get some more insight. Joining us now, Gilles Moek, AXA Group Chief Economist and Head of Research over AXA Investment Managers, joins us this morning. Gilles, pleasure to have you on the program. As Anna and I just said, we are seeing yields higher across the curve. I'm going to start there with that market reaction. Is this one that makes sense to you? Is this one that might alert the folks over at the ECB? Your initial take?
Well, so far the reaction is I think quite measured. I think the market is probably trying to digest what was the surprise of last night, which is that the left alliance did better than expected and came out first. That probably needs to be digested. But if you think about the distribution of outcomes, what we know now is that the two most radical proposals from a policy, from a macroeconomic point of view, the hard right proposal and the hard left proposal, have no chance to be implemented because none of the three main blocks of French politics are actually close to a majority. So the array of outcomes, if you want, in terms of policy setting is tighter this morning than what it was before just a few days ago. So an element of surprise. But what remains, I think, the main message of last night is that there is not going to be an outright majority for anyone. Obviously, it's an issue because it means it's going to be very, very complicated to find a sense of direction for French policymaking in the months and in the years ahead, maybe. But at the same time, again, the most radical outcomes have been taken out from the equation. So the market needs to digest it, but there is there's nothing in those results which would call for, let's say, sort of immediate stall. It's a complicated situation. But one thing which I think has been a bit missed in a lot of the comments that came out last night is the fact that if you take together the number of seats secured by the most radical part of the left alliance, together with the far-right Rassemblement National, together they are far from having the number of seats which would allow them to torpedo any decision from what would be a central coalition. So that gives a level of protection, if you want, in the array of policymaking outcomes which we could see.
So protection perhaps in terms of the politics itself, but Gilles, let's bring it right back to what the economists and markets really care about, which is that widening deficit. So yes, gridlock is better in that the spending isn't going to be exacerbated from the French government as expected from the far left or the far right. But I'm curious about what that means for gridlock, because the deficit is still growing, albeit at a slower pace. How does the French government deal with that?
I guess that, there are 2025 was supposed to be the year when France would deliver the biggest fiscal adjustment on the road of the stability program, which has been transmitted to the European Commission in April. We were supposed to do an adjustment of 1% of GDP. So that is going to be probably the focus of the market and honestly the focus of economists in Paris. How do you get there? So we are entering a state of negotiations, pretty heavy negotiations probably in the system. Given the fact that the center of gravity has moved to the left in the National Assembly, the sort of mix that you could expect between spending restraint and taxes is probably going to change. But again, what is key to me is the fact that those who were completely rejecting the very idea of trying to control the deficit and trying to control how public debt is moving in France, those outcomes are not there in the equations.
Okay, Gilles, so I understand. So I hear what you're saying about the centre, by some measures, the centre larger than the extremes. Does that point towards the most likely outcome? And I know this is verging on a sort of political analysis, but does that mean that your most likely outcome is a centrist coalition? Because that would involve splitting the left to some degree.
Defining centrist is pretty hard, and there might be a lot of shades of centrism, if you want, in the potential outcome. Another option, and we'll see how it pans out in the next few days, next few weeks, is that you don't even have the usual political government, but you have that sort of technical government, a solution which has never been experimented in France. But that kind of government might actually have a better chance at finding the means which would allow for a swift adjustment of the deficit in 2025. It's still very open at that stage.
Yes. And what is the role of international investors, do you think, here, Gilles? Because you point out in your notes that OATs are more reliant on international appetite than, for example, Italian and UK bonds. Does that leave them slightly more exposed?
UK bonds, I'm not sure, but other continental European bonds, yes, definitely. That is a double-edged sword. The reason why a lot of European bond markets no longer have a significant share going to international investors is basically because they left, and they left in droves roughly 15 years ago during the sovereign crisis. France did not have a bad sovereign crisis 15 years ago, so overseas investors stayed there. So that is obviously going to be key for, let's say, the first few days of how the markets digest what has just been happening. It also means that, given the fact that domestic players do not play such a big role in the bond market, there are reserves, if you want, of capital that can be deployed by domestic agents to take the place of some of the international investors if they so choose to adopt a sort of wait-and-see attitude. It's a sort of double-edged sword, really.
Gilles, thank you so much for joining us. Gilles Moek, AXA Group Chief Economist and Head of Research and AXA Investment Managers. We thank you very much. All eyes then on French markets and French assets. We'll get the perspective from Paris, from TKO Investment Management next. This is Bloomberg. Welcome back. 30 minutes from the start of the opening trade. Here's what you need to know about where we are on these markets right now. This is the picture across European equity market futures. Negative. CAC 40 futures down by 0.6%. They were lower than that, actually, just half an hour ago when they opened up, giving their first impression of the political story being told over in France overnight. And so we do look for some downside at the start of equity trading, but we'll watch to see how long that lasts for. Interesting, Gilles Moek talking about worst cases being avoided, and other voices also talking about worst cases being avoided. But what do we do with limbo? What do we do with political gridlock? This is the picture across the bond markets. We are seeing then a 4 basis points or so, actually 3.5 basis points higher on the French 10-year. We see yields going higher in other parts of Europe as well, but not to the same degree. And just for context, the 10-year yield dropped by 6 basis points just on Friday. So we are dealing with quite small moves given the politics and given what is at stake, it would seem. But that's where we are across the European bond markets this morning. Let's go back to Paris. Bloomberg Daybreak anchor Tom Mackenzie is there with a guest to try and take the temperature of what investment managers are thinking this morning over in the French capital. Tom.
Anna, thank you very much indeed. Yes, very pleased to say I'm joined by Thomas Friedberger, the CEO of Tikehau Investment Management, for a markets view, for a business view as well, in terms of the uncertainty. And it was interesting to see the front page of one of the newspapers here, Le Parisien, saying, "Et maintenant, on fait quoi?" Now, what do we do? And that overriding sense of uncertainty here in France on the back of this vote is very, very significant. You can almost feel it in the air. Talk to us about your take on what has unfolded, what it means for business investment in France going forward.
Look, it's true, Tom, that the institution of the Fifth Republic that started in 1958 were designed to avoid this kind of situation. So that's why we are talking about so much uncertainty. But if you look at, elsewhere in continental Europe, this is not unprecedented at all. I mean, it happened in Italy, in Germany, in Spain. It happens all the time, in the Netherlands as well. And so, finding a coalition is something that the French politicians will have to get used to.
What kind of coalition would be most market friendly or most benign for the markets?
It's very hard to say because, of course, coalition need you need agreements, and when you look at the political programs, they are not very compatible. So I think the problem is there will probably be more spending at some point, especially if there are people from the far left or the far right in the government. If you have more spending without more taxes, it's going to be a problem for the debt, on the debt side. If you have more spending with more taxes, it's going to be a problem for the stability of the attractiveness of France as a terrain of investment.
Do we need to assume on that point then that there will be a risk premium baked into and priced into French assets, particularly sovereign debt, for at least the short to medium term on the back of that outlook?
It's a very good question. Short term, it might happen. Medium term, I'm sure France will remain a very, very attractive place. I think there are 3 things that will count for investors in France. One is social stability. You need social stability. If you have that, that's fine.
You think there's a risk to social stability right now?
There is a slight risk. Of course, there is a slight risk.
Okay.
The second one is the credibility of France for investments. It's not only tax stability, which is obviously very important, but it's also stability in terms of energy. If you look at the different programs, especially the New Popular Front, I mean, it's very unclear how the energy policy will happen. So, that's something that foreign investors will need to understand in order to continue to invest in France. And the third thing is obviously the debt trajectory. And there, September will be crucial, because in September, France will have to discuss with the European community about the debt trajectory, and there is a budget also to vote. So we need a majority to vote a budget. And the big question is, will this budget be balanced or will it not be balanced? And what's the trajectory on the debt?
Okay, so September is something of a deadline.
Yes.
Something of a deadline. In terms of what you're hearing from your clients then, and we talk about the work that Macron has done, in the eyes of many, to lift France in terms of its prospects as an investment destination, and that now is being challenged. What are you hearing from clients?
Well, it's true that, that's been one of the main successes of the government that has been defeated yesterday, is to to promote the attractiveness of France. I mean, this place, Paris, and the country has completely changed in a couple of years. You have many more international, people working in Paris in terms of investments. You've got more startups, more entrepreneurs, more investments from Asia, Middle East, US.
Does that now end?
I don't think so. Honestly, I mean, we are still very excited. We have a big office in Paris. We have 17 offices in the world, but big in Paris, and we still see a lot of opportunities on the credit side, on the even on the private equity side. Europe is a leader in energy transition that will not end anytime soon. French companies are very dynamic in that purpose. Same in cybersecurity. So I think there are still very, very attractive things to do, and real estate is also a big.
Okay, interesting. Do you see investors maybe at least putting cash on the sidelines, putting it on hold, putting potential investments on hold until they get more clarity?
For sure, people will need clarity. That's for sure. So short term, you might have a little bit of jitters. Of course, markets don't like instability. They don't like, uncertainty. So you will have a bit of volatility for sure. But look at markets this morning. They're opening slightly down, but not much. So now it's all going to be about what's the coalition look like. And and is the government capable of taking decisions, especially on the budget side, in order for those investments to resume? But France is a big country. It's a big economy in Europe. Investments in France won't stop, and we are still very excited about the opportunity.
Are there particular sectors, as you look across your portfolio, that are more vulnerable right now, less vulnerable? You talk about real estate, for example. Yeah. As you scan the sector story in France, kind of what stands out to you in terms of vulnerabilities and opportunities, maybe?
It will probably depend on the trajectory on taxes. If you have, and it depends which taxes, but real estate might suffer, and is not real estate all over the world is not in a good shape, but might suffer more from an unfavorable tax situation, and then of course the more, I would say, sensitive sectors to politics is always the financials, right? So this morning the alternative tier 1 market for French banks is down 0.5 point, which is it's down, but it's not a catastrophe. Mm-hmm. We are still very, very excited by the opportunity in where France is good at, which is energy transition, some segments of the tech sector, consumer.
Okay. What about the capital markets? I mean, we've all kind of been waiting for that moment when the capital markets come back to life, not just in France, but of course globally to some extent as well. Certainly in Europe. Does it derail appetite for IPOs? Does it put a blocker on capital markets in France?
It might put it on hold for a short period, because for IPOs you need stability, and we've seen. I mean, there's been a couple of IPOs, not only in France but in Europe, delayed by the political environment, and so I mean there is obviously a need for IPO. There is a big promotion of IPOs in Europe by the different governments and the European Commission. They know that it's a crucial point to develop the European capital markets. It might be put on hold for maybe a short period of time.
As we look at the different political layup that we've seen in the UK versus France, is it too early to start to suggest that maybe some of that fund flow will move to the UK given the relative stability there versus France? Are you seeing any evidence of that, or do you see that on the horizon potentially?
No, not for now. I mean, you see it's moving target, but the UK at least now has clarity on what the economic program should look like. Things can move very quickly. I think post-Brexit and post-COVID, deglobalization has put a big focus on continental Europe as probably a fertile, I would say, terrain of investment. I don't think that will change anytime soon.
Okay, Thomas, thank you very much.
Thank you
indeed.
much.
Thomas Friedberger, the Deputy CIO of Gridlock Capital there, in terms of how the business community is reacting to, of course, the outcome of the votes yesterday here in France, the uncertainty, but also maybe some of the investment opportunities still in things like renewables, but the challenges as well of keeping those fund flows coming at a time of great uncertainty here in France. Kriti.
All right, Bloomberg Daybreak anchor Tom McKenzie there in Paris getting the take from TKO Capital. We thank you both so much. Coming up on the program, Delivery Hero shares called sharply lower as it faces an EU fine. That story and your stocks to watch next. This is Bloomberg.
Welcome back. We have 17 minutes to go until the start of the trading session, until the opening trade. This is the picture across European futures. We are expecting the French market to underperform a little this morning, down by 0.5% on CAC futures elsewhere. So modest losses expected. Of course, French politics to the fore. Joining us is our Markets Live executive editor, Mark Cudmore, to talk about these markets in 3 minutes. Mark, let's start with the French story. I mean, it is complicated, but it's interesting to think about how surprised we should have been by these results, because we were expecting a hung parliament, and yes, the left is going to have more of a say, but the left doesn't have a majority, certainly no control. So I wonder what this should mean longer term for French assets.
Yeah, Anna, I think it's right to phrase it that way. How surprised should we be? Perhaps not massively so. We know the history of French election going back the last 80 years is this idea of this Republican front that counters the right-wing side when they seem to do too well. So we knew that even though they're polling high, precisely because they're polling high, that incentivizes people to get out and vote for the alternative candidate. So them not being the largest party is not a big shock. Maybe it's obviously a bit of surprise that the left-wing coalition kind of came to the forefront, but we thought a hung parliament was likely. So not a massive shock to some extent. Yes, a surprise there. I don't want to diminish it entirely. What does it mean for French assets? It probably means that there's no reason for panic necessarily today. But what this election has done generally is brought into focus that France's fiscal situation is not looking sustainable. And now that they're likely to have a government that is gridlocked, it's not likely to improve. It's likely to get worse, if anything. So I think that the French story is going to be a long-running negative. It doesn't suddenly mean you price in much worse prices today, but I think that over the coming months, over the second half of this year, I think it's going to weigh on the euro, I think it's going to weigh on French bonds, and I think it's going to be a headwind for French equities as well.
Well, Mark, last week we had Jean-Claude Trichet and Peter Prett on the show asking what the line was for ECB intervention in response to this French election. Both of them really downplayed it, but Christine Lagarde over at the ECB is saying the exact opposite. This morning we're seeing yields across the curve in the French bond market higher by about 3 to 4 basis points. For you, what is that line in the sand where markets really have to be more worried about ECB intervention?
I just don't see it as being close. I mean, it would be bizarre if it came in now. I'm not sure what the line is. Maybe it's so not close that I've not really had analysed where that level is. But I think there'd be a couple of things. One is we'd need yields much higher to consider it. And second of all, it's about pace. It's like the Japanese intervention story to some extent. If we're just getting moves of a few basis points or even 10 basis points or 15 basis points, that is not dramatic unless we're getting that session after session. So I don't think ECB intervention is an immediate worry for traders.
OK, just briefly, Jerome Powell's going to be speaking this week. He might be dovish, seems to be a lot of people's expectation, Mark. Yeah, look, he should be dovish. Powell rarely misses an opportunity to hammer home the weaker data. We know he's got a dovish reaction function. Last week's jobs data gives him a chance to really be dovish in his testimony. And so that is my expectation. The risk is it's everyone's expectation out there. So that means if he doesn't go at that line, if he's surprisingly hawkish, that's where we'll get the asymmetric reaction function.
All right, Bloomberg Markets Live executive editor Mark Cudmore, we thank you so much for your analysis this morning. You can get more from him and the team. All you have to do is type in MLIVGO on your Bloomberg terminal. Now to one of the corporate stories we've been keeping our eye on globally. Boeing is to plead guilty to a criminal fraud charge tied to the 737 MAX crashes. Benedict Campbell, who leads our global aviation coverage, joins us now. Benny, walk us through the details of this agreement.
So this agreement came out a couple of hours ago. It was sort of a last minute, just before midnight accord. A Texas court needs to sign off on this. The contours of the deal are broadly, or had been broadly known. It's a fine that has to be paid. It's not a huge amount of money. It's about $480 million. Of that, Boeing will get a credit of about half that amount. So in terms of the actual outflow, it's not a huge amount of money. They have to agree to a corporate monitor for at least 3 years, so somebody who will independently monitor the progress that's being made at Boeing. They also have to pay money towards improving their compliance. So it's a package that is financially manageable for the company, and for the families involved in this, the families of victims involved in the crashes. the question really now is this something they can live with? Is this something they can accept? And the early messages that we're getting from them is that very much they feel this is another what they call sweetheart deal, just a very mild slap on the wrist to Boeing. So the question really is, what will they do about it? Can they somehow get in the way of this agreement, or do they have to really fall in line?
OK, so that's how the families might respond, Benny. Where does this leave Boeing and their search for a new CEO? This is ongoing.
Well, in some ways, it makes life slightly easier for Boeing. It puts a bit of a sort of floor on their legal issues. They now know what they can work with. It removes some of that uncertainty. Also, because they are pleading guilty, they're not going to court, and that would have potentially been a lot messier for them. It would have taken a lot longer. It would have been in public. The families would have come out in court, and so they've managed to get around that. But in terms of sort of the next steps, one thing that will be interesting to see is how do they arrange things going forward with the government. If you've pleaded guilty, normally that would exclude you from any government contracts. But in Boeing's case, that would be a really terrible blow to them. You know, they are a big contractor on a lot of military programs. They build a presidential jet. So it's really inconceivable that Boeing wouldn't be able to do business again with the government. So we'll look out for what's the workaround there. In terms of the next CEO, that is obviously a lot of baggage that that person will have to carry. We still don't have a name. We know that Dave Calhoun has said he wants to step down by the end of the year at the latest. So I have a little bit of wiggle room there in terms of timing, but it'll have to come sooner rather than later. And the next CEO, we don't know who that person might be. We'll have to sort of work through the details of this agreement.
Benedict, thanks very much. Benny Camel, who leads our global aviation coverage. Thank you very much for the update on Boeing. Let us get stocks to watch here in Europe then. Joe Easton from our equities team has a rundown. And of course, Joe, we start with all things French.
Morning, Anna. So we have to start with the French stocks. As you say, we are seeing some small declines in some European banking futures this morning, suggesting some weakness in the French banks, in particular following that surprise success of the left wing in that vote over the weekend. Now, these are the stocks to watch: BNP Paribas, SocGen, Credit Ag, and also AXA, the investment manager and insurance firm as well. We can actually see they're holding on to pretty decent gains for the past year, but have seen some weakness over the past month or so, given the uncertainty around this vote. And here's a quote out from Citi strategists this morning, noting that they are cautious on the French bonds, the OATs, and that could potentially weigh on the banking sector because of the relationship between the bond market and the banks. So they do think the European bank stocks could be weaker today. These are the other stocks to keep an eye on. We're looking at the companies that are exposed to French government contracts. So we're keeping a focus on Edenred, the voucher company, also Vinci that runs the airports, Dassault Aviation in defence, and potentially even Carrefour over in the supermarket space. Though obviously those firms do have more international exposure as well. But all the French stocks, as you say, is where we're going to be watching at the open. Then we got some breaking M&A news in the UK. Britvic agrees its takeover by Carlsberg. Now, this was rejected a couple of times around a month ago, but they've come back to the table and agreed a deal. Now, the price on this one is at 1,315 pence a share. We can see it trading at 1,210. About 12 quid a share. So we are trading above that in terms of where it's priced today. They had rejected 2 bids from Carlsberg previously. Now, Britvic makes mixers and also 35 other brands, including J2O and Robinson's, all of those drinks that we all love down at the pub. There's Carlsberg. We can actually see Carlsberg fell when news of this potential deal was announced. So this could potentially, again, be weakness in Carlsberg and a boost for Britvic, given the news of this deal getting agreed. Finally, one stock that's getting absolutely hammered on the pre-market Tradegate exchange is Delivery Hero. This is after news of a potential antitrust fine of around 400 million euros for the food delivery takeaway delivery company. That was announced over the weekend. Now, the company allegedly shared sensitive information with competitors, so it is increasing its provisions. It's something the company is doing itself, but the market very negative on this one today. We saw losses of around 15% on the Tradegate exchange. Keep an eye on that one. There's the 5-year chart, just bringing that one up. So here's the pandemic rally for the delivery stocks, and then a slump. We could see that stock go even further. Keep an eye on Delivery Hero in Germany.
All right, Joe Easton, our equities reporter, walking us through some of the stocks to keep an eye on. We thank you so much. He, of course, will be back with some of the early movers after the opening trade. And in the meantime, a redhead crossing the Bloomberg terminal saying that Grifols is confirming talks over a potential bid for about 5.5 billion euros for the company. Now, we should also mention on the Bloomberg terminal at the moment, it says that it looks like the stock right now is suspended by the regulator. So we'll actually see if that does indeed trade at the open. But that's just a headline to bring to you.
Yeah, that's an interesting one. And it adds up to something of an M&A Monday, doesn't it, this morning? A bit of an M&A theme building. As Joe was just talking us through the details of Britvic, Carlsberg agreeing to take over Britvic, the UK-based bottling business. Interesting the role that PepsiCo played in this. Carlsberg had bid twice before, I understand, for this Britvic business. But this time they were lucky because PepsiCo agreed to waive a change of control clause that would have meant that they could stand in the way of this bid. But because PepsiCo has relationships with both Britvic and Carlsberg, they decided it was in their interests not to do that. And so as a result, the deal can go through. So certainly something we'll watch. And just, broadly adding up to something more of an M&A feel. I mean, we've got through the UK election. We're not through because we don't understand all of the implications for the French election. But, you know, the voting has at least taken place.
But enough to already see in futures trading. You are seeing futures down by 0.7%. Joe was talking to us about the bank story as well. What else is kind of part of that drop that you start to see in terms of luxury names, for example? Even if there isn't a fundamental read-through, is there a sentiment read-through into some of the other sectors as well? There's another stock I want to mention as well. Maersk as well is just going to be one company that we keep an eye on in terms of what the kind of hurricane weather read-through is as well from a shipping story. And then lastly, bring it right back to Grifols where we started. It looks like the Spanish securities regulator is suspending the trading. So it's coming from the Spanish security side.
OK, so a lot of European M&A stories to keep our eyes on. Quick reminder, utilities was the best performing sector in Europe on Friday. Energy was the worst performing. Banks also were under pressure. We'll come back with the start of European trade. We'll be particularly focusing, of course, on what's happening with French assets. We do expect them to underperform this morning. The Open is next. This is Bloomberg. Just 1 minute and 47 seconds to go until the opening trade here in Europe. So we are about to see how the markets respond to the voting we've seen over the weekend over in France. In the meantime, let's just quickly remind ourselves of what we saw on Friday. This was Friday's session, kind of treading water to start with in Europe, but dropping towards the end of the session. And actually, we had some weakness coming through in UK stocks as a result of movement in the pound on the politics. Then we saw the data dropping, the non-farm payrolls data. Took the markets a while to attach their sort of dovish interpretation to that data, and expectations started to build around a Fed cut, and that's why we saw positivity by the end over in the United States. That's what we saw then on Friday. Kriti, take us through what the futures picture looks like, because there we see some real weakness in the French markets.
Yeah, some red on the screen, and you're going to see that on both sides of the channel here. When you look at Eurostock 50 futures down about 0.1%, FTSE 100 really shrugging his shoulders as well. But then the real pain, Anna, comes when you look at the French index, down about 0.5%. But remember, at the start of this, about an hour ago, we did a check, and it was down about 0.7%. So you are starting to see perhaps some of those losses paired, but still a pretty decent move lower, at least for the French index. Some of that might just be taking some chips off the table. And speaking of, let's get to some of your stocks to watch, some of your individual movers we've got your eye on. I want to start with the French read-through as well. I'm going to put SocGen as kind of the poster child for that, Anna. But of course, Delivery Hero is another one. This is dropping potentially, again, big potential on a trade fine, an antitrust fine that may come out of the European Union. So we want to see what that looks like. And we also are going to keep our eye on Grifols as well. Of course, it does say it looks like it's suspended by the regulator at the moment, but some deal news around there as well. So a lot to digest there, Anna, when you look at the single stock story.
Absolutely. Yeah, political uncertainty, fines to talk about on both sides of the Atlantic, and some M&A in the mix as well. So it is Monday. We start trade. The opening trade here for Europe then. Let's see just what kind of weakness we have across these European equity markets this morning. I can see the DAX is pretty flat. The FTSE is out at the gates and a little bit weaker. As I mentioned, that was a bit of an underperformer during Friday's session. Some of the FX moves having an impact there. We are waiting then. This is all sort of treading water stuff, or actually either side of the flat line, perhaps then, for the DAX and the FTSE 100. Waiting then for the CAC Caron. You can see that small C just to the right-hand side of the number for the CAC, and that indicates it is closed. That doesn't look... Well, there we are. We're down by... Well, it looks like 0.5%, which maybe is all we expected this morning. We did expect a little bit of weakness, and that is just a little bit of weakness, I suppose, a bit of nervousness attached to the French politics, waiting to see how conversations around putting together a government then, Kriti, really pan out. This is what we have then for you right now, down by 0.6% now on the French market. We're looking for weakness across the French banking sector, perhaps, because if the left is going to be, even not in a majority situation, but perhaps with more of a say, more of a steer around government policy making, although should we have low expectations for any policy making in a hung parliament, if the left is, though, more in a driving seat, what will that mean for the banking sector? We're also watching some of those infrastructure names that Joe was talking to us about. It is a complicated story around French assets, though, Kriti, but that's what we see on stocks so far this morning.
And as we kind of well just prescribed here, is that those banking stocks, especially in France, are dragging down the entire index. Your BNP, SocGen, Credit Agricole shares all falling over 1% and still dropping as we speak, Anna. So you are seeing some real pain in the market. But I should mention, as we talk about some of the kind of underperformance of the French index, there is some green on the screen in particular. Sanofi, for example, is higher by 0.2%. Not a major move to the upside. You have a couple of other names in the green, so it's not all broad declines, but at least in the French index, it is one thing that you're going to be seeing. It is also a tale of two heavyweights for the broader stock 600, for example. In terms of index contribution, it's your ASMLs, your Novo Nordisk that are moving to the upside. But to the downside, again, a lot of your French names are dragging on the index alongside some of the commodity names as well. And that simply might be in line with the move you're seeing in oil, for example. Brent crude trading at an 86 handle, down about 0.5%, Anna. And there, as a result, you're seeing your Shells, your Totals, even your BPs and Rios down a little bit.
Yeah, and the overall, you're right, the overall movement in French stocks is down 0.6%. But yes, there are some areas of green. TF1 and M6, they both rise as the far right loses the election. So clearly there was some linkage in the market's mind between the media assets in France and having the far right with a greater say over policy making. So that's the French story. In terms of the overall sectors then, food, beverage and tobacco is the best performing sector, and we have seen some M&A in that space. Both Carlsberg and its bid target, it would seem, moving higher this morning. Let's get a view on French assets with Frédéric Carrier, who is Head of Investment Strategy for RBC Wealth Management and joins us this morning. Very nice to have you with us, Frédéric. Thank you for joining us. Your initial response then to what we've seen, because it does seem to be a little complicated, how you interpret. In the immediate aftermath, it seems there's a negativity around French assets. But I wonder to what degree and over what time frame that's sort of justified.
So we do expect the risk premium of French assets to increase. It had decreased slightly last week as people had gone from the idea of an absolute majority of the far right to a relative majority, to a hung parliament. But now we have the far left, still a hung parliament, so still fiscal uncertainty, still a combative relationship potentially with the EU, so not very good news. But remember that the far left want to roll back reforms, and they also want to freeze the price of essential goods and services. So in terms of the impact on the stock market, you can see these sort of staple stocks potentially being impacted, stocks which are also dependent on French bonds, on spreads such as banks, such as utilities, the idea that concession terms might be renegotiated, frozen prices, frozen tariffs, all of those stocks are likely to be under strain.
OK, so we'll wait to see how the politics plays out. And there's a lot in play. Will we end up with a technocratic government? Will we have a sort of centrist government? Yes. Who will be the new prime minister? There's a lot of unknowns. As we're watching this, how much, Frédéric, should attach to international names that the international investor would know about? You know, these businesses are, yes, French, but not entirely dependent on a French story.
Absolutely. For our wealth clients, our key picks in Europe are global companies, global leaders in technology, in healthcare, in industrials which are underpinned by digitization, electrification, and we don't expect these stocks to be really dragged down by domestic French politics. And if anything, if the situation were to worsen and people were to take fright and sell French assets, sell perhaps European assets, we would take that as an opportunity to add to positions.
So that's the equity story a little bit. If we can broaden out for a moment, I'm curious about your view in terms of how the French markets react to the rest of them. The ECB, for example, this is my obsession of the morning, if you will. There's a lot of pushback from markets and from economists alike saying that the bar for ECB intervention is high if we continue to see this sort of panic in the markets. You're seeing it in the equity markets already. That drop is continuing. At what point does the ECB need to raise their eyebrows and pay a little bit more attention?
So I'm sure it's paying a lot of attention, but remember, it cannot intervene in French bonds at the moment if the problem is fiscal sustainability. One of the reasons that spread is widening is that France has a deficit of more than 5% of GDP, and it doesn't look like any government which might come out of this coalition will reining the deficit. So spreads might widen further. It would intervene if there was a reaction on, for instance, other sovereign bond markets, Italian bonds spread widening. We would think that at that point it would intervene and use some of its tools to stem contagion. But it will let spreads in France widen, and that is the mechanism through which the government would receive the message that it cannot have an expansive fiscal policy.
I think you're the perfect person to have on the show when we're coming back for the deficit, simply because these are multi-month, multi-year processes in terms of getting this under control, which is great for your investing time horizon as well. If you're trying to position around France in terms of while they're trying to get kind of their deficit under control, what's the trade here?
The trade is to stay put, look at your positions, and look at what happens in September. That's when they have to present a new budget, and that's when we really see what the true colors of the government are. But again, for us, we invest in global leaders with a very well-diversified revenue base. So we keep an eye on things, but we're not overly concerned at this stage.
What about capital markets activity, Frederic? We heard our colleague Tom McKenzie in Paris earlier talking to Voices on that front and asking about whether capital markets activity might be delayed in France. And I asked this partly because, well, obviously because of the French politics, but we've seen a little flurry of M&A activity and other capital markets activity in other parts of Europe this morning.
So I would think that M&A activity would continue. Some valuations are very attractive. IPOs, I would think, might be delayed. There is some uncertainty, and certainly with a less pro-business government, that might affect some of the flows.
Can I ask about the UK then, with that in mind, because obviously we've seen this Britvic-Carlsberg, or this Carlsberg offer for Britvic, and that's been accepted this morning. What impact, we have some political certainty in the UK, and perhaps that's completely unconnected to that news flow, but it's interesting that it comes just after we secure that political certainty. What is the focus for you around UK assets? We're going to hear from the Chancellor, Rachel Reeves, later on this morning. She's going to be talking about growth, and she has to deliver a lot of growth if she wants to deliver on the budget plans that everyone assumes.
Yes, I mean, she will talk about growth a lot. There's not very much fiscally that she can actually do. The two pillars, the pillars of growth that they have is a closer relationship with the EU, which is not entirely for them to build on, and also planning reform. So we do have hopes for planning reform, but we expect a growth trajectory which is perhaps slightly above what we've had, but fiscally a path which is quite restrained. So we don't see much of an impact in the short term, both in terms of growth and in terms of the Bank of England. UK assets, equities are extremely cheap, and there's been a lot of takeover interest, particularly in the mid-cap sector. And we think that this political stability that you've mentioned, that is really going to encourage the flows. So combined that and perhaps an overview of how UK pension assets invest in the UK, that might presage better days ahead for UK equities, but we remain cautious.
So what changes that? If you start to see more of these kind of mid-market acquisitions, what stops it all in its tracks?
Well, I'm not sure. I mean, none of the political instability has held back the takeovers that we've seen. It's really what holds back the UK is the index, the composition of the index, with a lot of defenses, with a lot of energy stocks, at a time where it's really growth stocks which are driving investor enthusiasm. So while we see limited upside for UK index, we do see some attractive opportunities in takeover candidates, in particular mid-cap stocks.
All right, Frederic Carrier, head of investment strategy for RBC Wealth Management in the British Isles in Asia. We thank you so much for your take on this very big markets day, of course. And speaking of, I'm going to put my Guy Johnson hat here and look at our sensational six, the heavyweights that are, of course, our comparison to the Magnificent Seven. You can see a little bit of a mixed picture here. Some major outperformance from ASML, of course. So you do have that tech leadership. But if you look across the board, you also see not a ton of movement in Ferrari and Nestle and Schneider Electric. You are seeing, of course, LVMH really suffering in line with some of those French stocks as well. So the sentiment read-through spilling over into luxury as well. Let's get a quick check on some of the other individual stocks on the move. Joe Easton's keeping, I think, a particular eye on the French story as well.
Absolutely. So we are starting with the French stocks, seeing some losses at the moment, but not huge losses, in fact, given potentially some of this was already priced in, the negativity around the uncertainty in France. That is a surprise, of course, with the left-wing success. But a lot of these stocks have come down a lot over the past month or so. So SocGen, BNP, and also some of the government contractors, Vinci, one of them, seeing small declines today, but not massive drops for those stocks. One stock that is seeing a massive drop is Delivery Hero. Actually, I've got that one completely wrong. We're going to deals first. We got some deals moves. Britvic, this one is up 5%. That's the takeover news that we had breaking earlier today. Carlsberg agreeing to buy that company, and that is therefore getting a bit of a boost. Carlsberg not actually declining. I was expecting to see a bit of a loss in that one, given investors were uncertain about the effect of that. But Britvic up 4.5%, 4.7% at the moment. Grifols, meanwhile, this one is halted. You mentioned that one earlier. The regulator over in Spain has halted trading on that one. They have confirmed a potential €5 billion or more bid for that from private equity and also the founding family as well. We are now going to look at Delivery Hero. I was so excited to get to that one. I got to it too early, but there it is, and it's down 17% following news of a potential antitrust fine of around €400 million for that company. They are putting a provision themselves to one side for it, so there's something that they are driving, but that one absolutely hammered today, the worst performing stock by some way today. Then in terms of some mining stocks, these ones are lower as well. A big drop in iron ore overnight of around 3%. Concern once again around the Chinese property market and also just an oversupply of that market. So we're seeing the London miners all declining today. Glencore, Rio, some decent moves lower in those ones. Kriti mentioned earlier shipping stocks, once again weakness there. Now a couple of things. Kriti did mention the hurricane Beryl, the impact of that is heading towards Texas, but also I've seen a note from analysts at Barclays saying they are underweight the sector, given potentially earnings have now peaked in that, given the rates might start coming down in that one. Finally, we have got a big move, and I'm going to wait till it's on the screen before I announce it this time, but it is going to be, there it is, it's Ubisoft. It's up 6%, upgraded at Jefferies. They double upgraded from sell to buy. This is the company known for its Call of Duty franchise. They reckon that's going to see a boost to earnings. They've got a €29 price target. It's trading at 20. Ubisoft up 6% this morning.
Joe, thank you so much. Joe Easton from our equities team with a roundup of all of the movers this morning. Traders and the markets are digesting the results of the French election. We will discuss that and more with the CIO of asset manager Candriam. That is live from that beautiful rooftop in Paris. That is next. This is Bloomberg.
Welcome back to the opening trade. We're about 17 minutes and change into today's session. When you look at the French market, you are seeing some underperformance, but you're starting to see some green on the screen for the FTSE 100 and the Stock 600 as well. But again, it is that underperformance in France that we're really paying attention to, down about 0.3%, although pairing some of the losses we saw in that future story as well. When you look at the broader story, euro dollar is still at 108.30. So even though you are seeing that French underperformance in the stock market, the FX market not seeing that same margin of weakness, which brings us to the bond story as well, because when you look across the curve for those French bonds as well, you are seeing yield moves of anywhere from 4 to about 2 basis points. So again, seeing a different bit of moves in the French story as well. Yields higher, though, across the curve, I think is what you need to know. It's simply not by the margin, again, that would create a lot of comfort. Investors really figuring out where they want to go next with this investment. Speaking of, let's go to Bloomberg Daybreak anchor Tom McKenzie, who, of course, is covering the story out of Paris for us, from the politics to the markets. Tom, over to you.
Kriti, thank you very much indeed. Yes, pleased to say I'm joined now by Nicholas Forrest, CIO at asset manager Candriam, and we talk about the pressure on French assets today. It is not dramatic, though. It is not reflecting the drama, the political drama. There is the downside pressure coming through, but it's not a huge sell-off so far across French assets, whether it's the sovereign bonds or equities. What do you make in terms of the market reaction so far, Nicolas?
So it was a big surprise, of course, because we didn't expect this outcome. But when you look at the market reaction today, it's flattish. It's flattish because I think that today investors believe that there is no clear majority for the Rassemblement National, and there is no majority also for the far left, the Front Populaire. It's just between. So what we believe and what the investors believe, Macron should find a new coalition between the center and the center left, which is not dramatic in terms of, I would say, a political and economic situation.
Okay, and that still remains a big if you can find if you can find that coalition. It's something, of course, the markets and we'll be watching very closely. In terms of the spread, then, what are you looking at in terms of the next level for the French spread, sovereign debt over their German counterparts?
Well, in fact, we know that we touched the 86 bips, I think 10 days ago. It was globally one of the maximum levels that we reached since 2012, in fact. And now we believe that we will stay in a range trading between 60 and 80 bips. I think that it's possible to make a maximum and to touch, for example, 100 if there is no coalition or if the public and the program of public spending will be too important. So that's exactly what we are today monitoring, if we can break the maximum of 86, 90 bips area.
Okay, so that's what you're watching.
Yeah.
And you see that as an outside chance, but you say that it is still a risk. It's still a significant risk. It's not your base case. But in terms of that blockage in the National Assembly, the inability to form a government, that's the risk in terms of a spread above 86 basis.
So if I may, I think in a short-term basis, we don't believe that the risk is high. There is no systemic risk for France or for the European debt crisis. The question is more about medium term. Medium term because what can we expect in terms of policy with this new government? What can we expect about the deficit? And in this case, because of the political instability, because of the economic program, we can expect more spread widening.
Where does France sit then in the basket when you compare France to Italy to Spain when it comes to sovereign debt?
Well,
are we now looking at a France that belongs in the peripheral camp?
Yeah, I'm afraid that this comparison is not great for France because clearly when you compare the situation with 2012, for example, during the European debt crisis, the situation has dramatically changed. Now France has become the weak man of Europe. We really have a bad deficit, and it's close to 5.5%, quite comparable to Italy and a high level of debt. So the fact is today we can compare France to Spain or to Italy, and that's the reason why, in a medium-term basis, it's not impossible to see the spread of France going more and more closer to Italian spread.
So what would you need to see specifically to want to add French debt?
To add French debt, that's a good question. I think today, in the short-term perspective, what we need to see first is the decision about the Prime Minister, the Finance Minister. Then what about the public spending and the public deficit? What about also the excessive deficit procedure? So that's very important now to observe the Macron decisions about the Prime Minister, the Minister of Economy, and also what is the program about the deficit for 2025.
What about equities, French equities? Under pressure, we just showed a board showing the French banks feeling a little pressure in the session today. Of course, at one point, banks like BNP Paribas took a knock of around 10% on the back of that decision from Macron. Is there an opportunity to add in terms of French equities, or does the uncertainty around the National Assembly keep you with cash on the sidelines, keep you steering clear of French equities at this point?
We are not very negative about European equities, but the fact on a relative basis between US, UK and European equities, today we prefer to be more cautious about European equities, about French equities. There is no specific negative view, but on a relative basis, we believe there is more appetite for an investor, international investor, to buy UK or to buy US equities than European equities. Because it's true that there is a case for buying more European equities because of stronger growth, because of the ECB is cutting rates. But this political uncertainty could weigh on the European equities perspective.
Okay, so for now you're taking a cautious approach to European equities.
Correct.
You favour the UK, you favour the US for now. What are the downgrade risks for France given the uncertainty that we now face?
So you know that S&P and other rating agencies have reviewed the ratings of France for many weeks now and months. So we are not expecting a big change in 2024. But for the review of 2025, there is a risk to see a change of the outlook for France. That's, of course, it will depend on the deficit, and it will depend on the decision of the new government. Yeah.
And one of the lines that jumped out to me from one of your previous answers was describing France as the problem child, essentially, of Europe right now. And so when you're thinking about your allocation to credit, how should your investors, how should your clients be thinking about that narrative and how it layers on top of French credit? What is the risk? What is the pain point for French credit at this point?
The pain point, of course, is evolution of the 80 bond spread. If we break and if we go wider than 80 bips, it could significantly impact the credit market. But for the time being, the credit has been resilient. When you look at the credit market, the financial credit market, 81, the market reaction remains okay. And over the last 2 weeks, we saw a spread tightening. So there is no really negative impact today, but that's something that we are monitoring very carefully, obviously.
As we think about the different political combinations, in most cases, many of the combinations will lead or could lead to additional spending. There may be higher taxes.
Yeah.
There's additional spending coming through. That's additional fiscal input into the French economy. Is there an economic lift, actually, that could come through from some of these political combinations, where it's Macron and the socialists, or Macron and the Republicans? Does the French economy stand to benefit, potentially?
That's a very fair and interesting question, in fact, because we have 3 scenarios today. One scenario is a far-left government and coalition, which remains and which seems to be very unlikely. Then a center-left coalition with Macron, and then a technocratic government. But what is clear for the two first scenarios, that's a scenario where we can expect more increase of tax, a review of the pension reform, and more spending. But what we can expect is potentially to have increase of tax rates, like in the UK, in fact, to partially offset more public spending.
Okay.
So that's a balancing act for the new government.
Okay, Nicolas, thank you very much
you.
indeed for the market take in terms of how to position, how to allocate in this uncertain French environment. Nicolas Forest, CIO at asset manager Candrim, on the problem child that France now is in terms of its European sitting, at least. Anna, Kriti, back to you.
Yeah, really fascinating. Bloomberg Daybreak anchor Tom McKenzie in Paris with that important story on the rooftops. They're battling it out with the sirens, as you do when you broadcast live in Paris. Thank you, Tom, for that conversation. Really interesting about where France sits amongst other European nations when it comes to the debt story. The weak man of Europe, comparing it now with Spain and Italy, we heard there from Candriam. Kriti, let's go to another story. We're going to be focused on the United States and US politics shortly. Interesting to see that the Prime Minister of Hungary, Viktor Orban, he's been to Kyiv, he's been to Moscow, he's been to China, he's just visiting China, and now he says he's going to Washington.
And unclear, we still haven't heard from the White House, for example, whether or not they're going to be receiving him. That is not a foregone conclusion. But in the meantime, we are getting comments coming out of the Chinese foreign ministry as well in their daily press briefing, saying that she and Orban discussed the Ukraine crisis, Orban's Russia visit, as well as saying that when it comes to Ukraine, they are on the same page.
And a US spokesperson last week saying they were concerned about Orban's trip to Moscow. So we'll see what he has to say when he gets to Washington. We'll be thinking about Washington next. Pressure mounts on President Biden as he vows to stay in the race for a second term. More on that next. This is Bloomberg.
I'm the guy that put NATO together, the future. No one thought I could expand it. I'm the guy that shoved Putin down. No one thought could happen. Who's going to be able to hold NATO together like me? If the Lord Almighty came down and said, Joe, get out of the race, I get out of the race. The Lord Almighty's not coming down.
President Biden speaking exclusively with ABC's George Stephanopoulos, of course, and the fallout of the debate performance that he had. Now, several Democrats really pushing for him to potentially step down. Let's talk about the likelihood of that, though. Joining us now, Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, joins us this morning. Leslie, let's walk through the likelihood of that. The odds here, despite some of the pressure that you were seeing from really both sides of the aisle, what are the odds that Joe Biden actually steps down, and in whose favor?
these things are less about setting a specific odd and much more about watching a dynamic and a momentum. And what we've seen since that debate, which was only, 10 days ago, is pressure building from the public, but especially from within the Democratic Party, from members of Congress. We've seen a very significant divide amongst high-level donors in the Democratic Party. And, we're told, like you, we're in conversation with a number of Democrats who all feel that the Democratic Party has never been more divided than they are right now. And that in itself is a very bad sign at a time when the Democrats feel, rightly in my view, that this is a very significant election, that the choices that the American electorate face are very, very stark. And the Democrats need to be unified as they were in 2020 after South Carolina behind Joe Biden. And now it looks like that unity has been fundamentally broken and difficult to get back. Now, as members of Congress return to Washington today, there's a view that that pressure on President Biden will mount. And the question really does come down to whether he himself will change his mind and whether those people around him, his family in particular, will begin to respond to that very intense pressure.
Well, him changing his mind is just one thing, Leslie, as you know, and then the other is who the alternate candidate could be. Of course, if you look at some of the predicted polling odds, for example, or even some of the donor money, a lot of effort and thought is going on behind Kamala Harris and whether she's the right candidate to take over the nominee. But if I remember correctly, the last time around when she ran for president, her polling odds against President Trump were not that strong. Would this time be any different?
Look, again, we like to talk about polls, but the reality is the momentum will change how Kamala Harris is experienced by the electorate. If the Democratic Party were to unite behind her, that's a very big if, but if they were to do that, if President Biden were to step aside, that in and of itself would change how people see her. She would be put on the stage. She would have people around her campaigning for her. And I think the way that she's viewed would shift very rapidly. She's actually, since that debate, there in some polls, they have suggested that she is a stronger chance of defeating the former President Donald Trump than Joe Biden does. And that's before, any prospect of her actually being formally announced. So watch this dynamic that if you think just back a few weeks, the ground has already shifted very significantly. It will shift again if President Biden decides not to run. But the funders, or the high-level Democratic donors, which are absolutely essential, are divided on the question of Kamala Harris. We know, of course, that she's the obvious candidate because the funding that's already been raised by President Biden could automatically go to her. That's not the case with other candidates. And so trying at this very late date to run one of the many people whose names are in circulation, Governor Gretchen Whitmer, Governor Gavin Newsom, a newer but very up-and-coming governor in Pennsylvania, Josh Shapiro. Having a governor from a swing state, I think many people feel would be beneficial. But there's also a question of who would be the vice president on a Kamala Harris ticket. So these are all very complicated questions at a time when there is still a lot of time left, but it doesn't feel that way. The urgency around this in the run-up to the August convention is very significant.
Leslie, who are we waiting to hear from in the Democratic camp that we have not heard from yet? Are there voices that have not spoken who could move the dial on this? We've heard from President Biden himself, of course. He's clear at the moment that he wants to hang in there. Is there anybody's voice that is missing so far from the debate?
Well, there are a lot of people who have been very careful in the words that they make. Of course, we're pointing to the small but significant number of Democrats in Congress that have spoken up, but the majority of them are being much more cautious and much more careful. And again, this comes down to, what is the tipping point? At what point will so many people begin to speak up that there is a deluge of pressure on the president to make a decision? But this is a very careful calculation. People don't want to get ahead of their party. They are under pressure, many members of Congress, from a sense that they have that their electorate might be looking for an alternative. But ultimately, if you think about this, as much as so many people have suggested that they feel President Biden is too old, that doesn't mean that they're going to, on election day, switch and vote for Donald Trump. So it's really the undecided voters, the independent voters that matter. And it's also a question of whether people are driven to the polls, whether they can maintain the enthusiasm at a time when, if you think many younger voters and many Arab American voters in Michigan, for example, are already very concerned about whether President Biden is the right candidate for them.
Yes, and you have to wonder how much the global themes might overlay what is clearly very much a domestic story. Punishing incumbents seems to be something that we've seen in lots of elections so far in 2024, and also low turnout. Those could play a role, I guess. Let's look ahead to the rest of this week, Leslie, and I know there's a NATO meeting taking place, not just any NATO meeting, but celebrating 75 years of this alliance. What extra pressure will President Biden be under at this summit, given that debate performance and all of the questions around his leadership? This could be something that comes to dominate a summit that is supposed to be a show of strength.
It certainly is dominating it. Many of America's closest allies are very concerned, but it could also play to his favor if it goes well. President Biden hosting the NATO summit in Washington at a time when America has led a coalition to support Ukraine, when NATO has been absolutely critical and very successful and very cohesive. Also at a time when there's a grave question about whether support for Ukraine will continue, whether NATO will remain close, and what threat Donald Trump presents to the NATO alliance. It's a deep concern, obviously, for America's closest allies and partners. And if President Biden can turn up and demonstrate, as he did, go back to February 2022, before Russia invaded Ukraine, when the president got out in front of that, released intelligence, really rallied America's closest allies, many of whom didn't believe that that invasion would actually take place. If President Biden can really demonstrate that, that will certainly, if not change how people feel, it will delay the pressure for him to step down. That may or may not be a good thing, given how quickly the election is, the proximity to November we are.
Yeah. All right, Leslie, final question to you. I'm curious about this kind of foreign policy record, and you laid it out there well in terms of the pushback that Joe Biden is getting, especially in Michigan, for example, which is, by the way, for our international audience, a Democrat governorship and state legislature as well. But Leslie, I'm curious about what voters are going to be most sensitive to when it comes here, whether it's Kamala Harris, whether it's Gavin Newsom, even Joe Biden. No one here has a very clean foreign policy record, let alone President Trump. What do voters want to see? Very quickly.
Well, very different kinds of voters. Voters in Michigan, many of them, the Arab Americans, are concerned that President Biden and America are not putting enough pressure on Israel to exercise restraint. Whether that peace plan comes through will matter. Younger voters care about climate and climate change, and they want to see that progressive force in the White House. And neither President Biden nor President Trump come across as young, but President Biden is clearly strong on the climate agenda, which I think matters. The rest of the candidates don't have a well-known foreign policy, and this is one of the things that is very clear as you begin to think about who might come next. They're really candidates who are relatively unknown on the internet, very unknown on the international stage, and known, when they're known domestically, they're really known more for what their homegrown policies are, not for what they would do when it comes to NATO or the Middle East or climate change or China. Those are things that people would really need to understand. But those are not the issues that drive voters to the polls in the United States.
Leslie, thank you very much. Thanks for joining us. Leslie Benjamin, Director of the US and Americas Programme at Chatham House. Thank you very much for joining us to talk about how President Biden is maintaining his stance around his own candidature, but also looking ahead to that NATO meeting. And with that NATO meeting in mind, interesting to see then these lines coming out from China and their foreign policy briefing this morning. So we have a NATO meeting taking place this week, of course, and China is saying NATO should stop creating tensions in Asia-Pacific, and also saying that Asia doesn't need military groupings. Clearly, all of this coming then ahead of that NATO gathering, 75 years of the North Atlantic Treaty Organization. Coming up, France may have dodged a far-right win, but how will Macron govern? We'll discuss that with Pascal Lamy from the Jacques Delors Institute. Markets are less moved than they were. Actually, stocks are up now. CAC 40 is up. European stocks are up. We don't see such tension in bond markets and FX markets than we did just hours ago. But we'll talk about the bigger picture with Pascal Lamy. That conversation is coming up shortly. This is Bloomberg.
We will be in a position to have an absolute majority, maybe in a year. France is going to be totally deadlocked, with 3 groups of roughly equal size in the National Assembly. So that's the way to go. It's unfortunate we will lose another year, but if that's what it takes, well, then that's what it takes.
A majority has made a different choice for the country. From now on, the will of the people must be strictly respected. From now on, no subterfuge, arrangement, or combination will be acceptable. The lessons of the vote are irrefutable. The defeat of the President of the Republic and his coalition is clearly confirmed.
Ce soir, la formation politique...
Tonight, the political faction I represented in this campaign, even though it performed 3 times better than predicted in the last weeks, did not attain a majority.
Ainsi, fidèle à la tradition...
Thus, loyal to the Republican tradition and in tune with my principles, I will hand the President of the Republic my resignation tomorrow morning.
Just some of the political voices reacting to the surprise results in the French election. Not a surprise that we end up in a hung parliament situation, but a surprise that perhaps the largest party is going to, or the largest parties grouping is going to be from the far left. So we'll see how that plays out. We'll be watching very closely who is picked as a prime minister before we even get to that point, what conversations are had between the parties, what kind of government can be put together here. We'll have more conversation about that in just a moment, but a quick check on French assets. The CAC 40 now in positive territory. Stock 600 also gaining, up by 0.3%. French stocks then didn't linger long in the red. The French 10-year yield entirely flat now. So compared to Friday's close, we saw that yield moving quite considerably on Friday. Yields coming down. This morning, we saw those yields jumping out of the gates 46 minutes, no, more than an hour ago, in fact. But that didn't last for long, and now we're back to the flat line. In terms of the euro, we're pretty flat there now as well. And this is French stocks for you. We've got a host of French stocks still in the red, some of them still responding to what's going on politically over in Paris. But I can say on the CAC 40, we don't have all that many stocks, maybe 10 or so in negative territory, the rest in positive territory. Joining us now with his perspective on the French political scene, Pascal Lamy, coordinator of the Jacques Delors Institute in Paris, Berlin and Brussels, and former Director General of the World Trade Organization, of course. Pascal, thank you so much for joining us. What is your assessment of the likely outcome here, as we no doubt go into a period of volatility where different parties in Paris talk to each other about what kind of coalition perhaps can be brought together? What are you expecting to see?
Well, I think you've properly characterized the situation. No outright majority, as expected, so a hung parliament, but a different balance than expected among the 3 dominant groups, as left and center are ahead of the extreme right in a number of seats. So some sort of coalition between the left and the center will probably be necessary to support a government. But of course, the contours of this possible majority are still very uncertain, not least because the left is a coalition of parties who may not agree on everything, and that is the same for the center. So we are in for a period of political uncertainty, and in this sense, France is a bit like other European countries who have a parliamentary system. So after elections, it takes time to find a coalition able to support the government, but France remains a presidential election-based regime. So the big question mark, which is what will happen in 2027 at the next presidential election, remains wide open, and this is uncertainty.
Yes. I mean, before we get there, we just heard from Marine Le Pen and some of her comments last night. She was saying she was taking a positive view of what some would see as a worse than anticipated outcome for her party. But she was taking a positive view and saying that they will have a majority in a year, perhaps because she thinks that the president will be forced to call another election within a year. Would you expect us to end up in further parliamentary elections in a year, Pascal?
I think the President of the Republic will try to avoid this and try to build a coalition that will last until 2027, which is the next presidential election. But it is true that although the extreme right did 10 million votes, which is much more than the left, which did 7 million, there has been a clear rejection by roughly 2/3 of the French electorate of a extreme right-led government. So this is a lesson for the future, although the alternative is not yet clear. And we will see in the coming month whether Macron gamble, which was to call these snap elections after the defeat of his party in the European elections, will have paid or not. I think for the moment the jury is out.
Well, Pascal, how long does this show up before this shows up in actual policy implications? Things like the tax agenda from the left, or for example, or trade deals. When can we expect those early signs to actually show up in the way that France not only governs, but shows up in its finances?
Well, France will be governed because we have, as I just said, a presidential system plus a parliamentary government. So France will be governed, no doubt about that. We are not in a situation like a full parliamentary system where as long as you don't have a majority in parliament, there is no government. But the direction of the main policies in France will remain unknown until we have this coalition. It's likely to be more left than what we had so far, although the move to the left, in my view, will be limited by the high budget deficit and the high public debt which France has. So my expectation is a limited shift to the left. Then this will create a new field for the parliamentary elections that will accompany the next presidential election. So far, there is a coalition. The new numbers show that a coalition between the extreme right and the extreme left to vote down a government would not be sufficient, which would provide with a margin of stability for the 3 years to come.
So, Pascal, you walked us through kind of the implications for the deficit and the economics and the policy agenda as well. I'm curious what this means for France on the more international stage or on the broader European stage as well. For the markets, we've heard it being compared to, from a fiscal point of view, the likes of Spain, Italy, for example. One guest this morning even calling it the weak man of Europe. I'm curious how that affects its ability to negotiate on the international stage.
That's a good question. I think, at least from my side, from my view, the good news of yesterday's elections is that there will be no change in the French push for more European integration. This has been the policy of the French president so far. The likely possible coalition will be a pro-European coalition. So on this, there is no change. And in this sense, the international, European and international stance of France will likely not change, which, again, for many of us is good news, although again, 1/3 of the French electorate voted for an extreme right party, which shows that there are issues, problems, frustrations, miscontent under this reality, which clearly need to be addressed.
Pascal, thank you so much for joining us. Pascal Lamy, coordinator of the Jacques Delors Institutes in Paris, Berlin and Brussels, and former Director General of the World Trade Organization. A quick check on French assets then for you. When we do see some recovery in French stocks, just as we see stocks elsewhere moving higher in Europe, the euro is pretty flat, yields pretty flat then, Kriti. I think it's really interesting to think about how this plays out and to what extent bond markets are in charge here and setting limits about what happens, because you could argue bond markets should be nervous about the left, but on the other hand, post what we saw with Liz Truss in the UK, the argument from some in the bond markets is that actually bond markets are more in charge than they used to be because they showed the power and influence that they can have, in a different geography, but perhaps that has stuck.
Yeah, it's an interesting one as well, because so many people were, I think, expecting a more violent reaction, and we actually didn't see that, to the point that it actually brought up the topic of ECB intervention, for example, and yet guest after guest is saying this is not a realistic one, even, however, perhaps in the context of the pushback we got out of Germany as well. But I think to echo the words of Mark Cudmore, this is still a longer-term story, right? We're still talking about the deficit, and that is still kind of a runaway train at the moment.
We heard that from Candriam, didn't we? Talking to Tom McKenzie on that beautiful rooftop. Lovely to see that sunshine. But the Candriam guest was saying that France is the weak man of Europe, comparing it now to Spain and Italy in terms of bond markets, saying in the short term there is risk, but it's actually the medium-term risk that he's more focused on, and that is around policy and the deficit and the potential for more spread widening.
Yeah, we're seeing that. It certainly has been a long couple of weeks. I feel like this is our sixth election or something in 30 days. But you're already starting to see that price in the market. My question is, when is it going to show up in the FX market as well? Euro dollar 108.34 is where we're at. Equity markets making a bit of a rebound. That does it for the opening trade. The pulse is up next. This is Bloomberg.